Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So current markets are very volatile at this point in time, and I'm planning to put together loads of videos for us inshallah that are high quality stocks that you could potentially be researching about, and that's all I've done over the last few weeks. So if you haven't seen any of the videos in the last 4 or 5 videos, that's what they were all about, just trying to find high quality businesses that we can own right now while the markets is very volatile. And what I mean by that is we have good days and bad days. Right now, for example, we take today a day like today where the markets are very there's not much going on, to be fair. There's a lot of companies that are down, and of course the oil side of things basically up because of what's happening in the Middle East. And so there's a lot of uncertainty, and when that happens is that basically is the time we get an opportunity to add to a high quality businesses. And again, I'm going to reiterate again, I remember in April this year when everybody was very skeptical about the stock market and buying things, and everyone was worried about everyone's trying to sell basically. I was getting messages from friends and saying, should I sell it now? What should I do now? And guess what has happened since then? The stock market is overall basically up quite a bit, especially the big boys. As you can see here, for the last 3 months, the performance of the S&P 500 has been absolutely amazing, especially if you own the big boys here. Yes, if you own some of the pharmaceutical companies, oil companies haven't done as well, but everything else basically is done decent, right? So as always, just buy high quality businesses, hold them for a long time, and forget the noise. And that's exactly what we're going to do. So what I would like to share with you guys today is 5 companies that are right now high quality businesses, but they are expected to grow 15 to 50 something percent basically by the end of this year, by the end of next year, not in 2026. So every single one of these companies are expected to grow basically double digits, okay, for the next year. So that is, to me, that is the type of companies we should be owning. That's, to me, that's the high quality business that is growing 15 to 50 something percent. So I'm going to share that with you guys today. If you haven't joined us to the Patreon account, please do so, because that's where you can get access to the family portfolio, all the buys and sells, and you can ask me any questions. And at the same time, you get access to the Discord for free. So if you just click the link on the description, there's a lot of amazing brothers, mashallah, tabarakallah, that are actually doing great job in terms of sharing what they do, like what they're buying, what they're selling, and talking to each other about stocks and every single day. And genuinely I appreciate that, because it's not just me anymore that's basically sharing my journey, sharing what I'm doing. There's a lot of brothers who are doing that. So click the link on the description basically if you want to join us basically on the Discord, and that's it. So let's get started with the video. So what are we looking for today is the EPS growth for next year, and also we want to look at the revenue side of things. So every single one of these companies are growing 15 to 50 something percent. Again, some of these companies might be slightly overvalued at this point in time, or maybe overvalued, and you just need to be patient. Do not buy these companies straight away, because if they're overvalued, okay, great companies, when they're overvalued, there's no point buying them, because in the end of the day, you're going to lose money in the long run, right? So we have to be careful with that. So try to wait for, put yours on your watch list and then just leave them there. Okay, right. Let's now talk about the first company, and that's TSMC. Now, this is probably by far one of the best semiconductor companies out there. Nvidia's and all of these companies that are, AI, trading higher multiples, whatever. This is the company they go to once they've got their designs made. Okay, then this company makes the base of the product that the companies require. Now, as you can see here, they have a little bit of dividend. They have a wide moat. Profit margin, return on equity, return on invested capital is absolutely amazing. Free cash flow over $30 billion, but they are expecting to grow. Basically, they're expected to grow 15%. Basically this year and next year, 2026, and revenue is expected to grow about 17%. And right now, according to Morningstar valuation, you've got about 23% upside. Again, remember, this is just an estimate based on the analysis they've done, based on their cash flow models. Okay, that is basically where they think the company is going to be. Now, it's not only Morningstar that's saying this. If you go to, for example, Seeking Alpha, as you can see here, Quant is actually saying it's a strong buy, Wall Street is a strong buy, and Seeking Alpha Analysis is a buy. And if you click Wall Street, for example, you can see they've got 11 strong buys, 5 buys, 1 hold, and no sales whatsoever. 5% upside from where we are. $224 per share is where they think the price should be. 262 when it comes to Morningstar. The next one that we're looking at today, by the way, if you haven't liked the video already, please do so. It really genuinely makes huge basically difference to the channel. Okay, Intuitive Surgical is basically the next one. 189 billion market cap. It has a wide moat. $516 per share. No dividends yet. Profit margin, return on equity, return on invested capital is good. Free cash flow $1.7 billion, and they are expected to grow about 16% in terms of EPS, and in terms of revenue they're expecting about 15%. And according to Wall Street, they are saying it's a buy. We've got 14 strong buys, 8 buys, 9 holds, 1 sell, and 1 strong sell. It's about 11% upside from where we are. $575 per share is where they think the price should be. The next one that we're looking at today is Uber. Uber is a company that we talked about quite some time. It is a little bit overvalued, okay, according to both of these companies, by the way. But according to, based on Morningstar valuation, Uber is about 2%, so it seems slightly cheaper, and it can basically, based on, even let's just go back here, it might be actually down that much just today if we look at it. So just down about 1% just today, so that can easily change. Okay, now it has a market cap of $182 billion. Return on equity, profit margin, return on equity, return on invested capital is actually quite good. $7.7 billion of free cash flow right now. EPS is basically quite good, 22%. Revenue about 15%. Really, really good in terms of expectations moving forward for this company. This has been quite interesting. I'm just a little bit skeptical about the US. I think they're okay, but the rest of the world, I'm not sure. There's a lot of competition out there for this company, so that's the only reason I haven't actually bought the stock yet. And if I bought it, it'll probably be in the family portfolio, but I'm not sure yet. I'm just a little bit skeptical about Uber, but it is still a great company nevertheless. Okay, if you look at for example, Quant is saying strong buy, Wall Street is a buy right now, Seeking Alpha is a buy, so another one that's basically buyers all around. 32 strong buys, 13 buys, 9 holds, 0 sales whatsoever, and about 13% upside from where we are. $96 per share is where they think the price should be. 84 for these guys, which is very, very interesting. The next one is we're looking for today's Shopify. Shopify is one of those companies. I'm not sure why I put that. I was just checking, I guess. This company has a wide moat. So if you go to, for example, Morningstar valuation, you can see it has a wide moat. As you can see here, 143 billion market cap, $106 per share right now. No dividends yet. Return on profit margin about 17%, return on equity 16%, and return on invested capital 9%. $1.7 billion of free cash flow right now, which is decent. EPS expected 29% and 20% revenue, 13% upside from where we are, which is really interesting company right now. The fact that it's very profitable, it's got some free cash flow and expected to grow massively, and right now it seems undervalued, or 13% upside from where we are, which is really good. And looking at Seeking Alpha, as you can see, Wall Street is saying about 24 strong buys, 11 buys, 14 holds, 1 sell, and as you can see, 7-8% upside from where we are. $115 per share is where they think the price should be. Right now it's about $106 per share. And the final company we're going to talk about today is Micron Technology. This is one of the companies that I've always kind of it's been under my radar, but I haven't actually paid too much attention to it. But right now it seems very interesting because they're expecting the earnings to grow 58% and revenue about 27%. It seems a little bit expensive according to Morningstar valuation. In terms of market cap, it's a huge company, 128 billion market cap. Profitability is decent. Return on equity is okay. Return on invested capital is not bad at all. And now there's a lot of people that are interested in this company. And as you can see, we got Quant is strong buy, Wall Street is a buy, Seeking Alpha is saying as well. The third out of the 5 basically companies is basically according to Seeking Alpha. It is all buys. We got 25 strong buys, 6 buys, basically 5 holds and 1 sell. And as you can see, about 7% upside from where we are. $124 per share is basically where they think the price should be. So if every single one of these companies is expected to grow massively in the next couple of years, basically in the next this coming year, so 2026, So it is really interesting. They are very profitable businesses, and some of them are undervalued at this point in time, and they are expected to grow. And if that happens, that means the price of this, basically their prices, if this happens, basically the price of this of the stock, of course, will go up. And this is the type of businesses that we should be doing a bit more research on, and of course adding to our portfolios. I'm not saying buy all, basically 5 of the companies, but you need to be careful because all of them are technology companies, and you need to be diversified. Have a diversified portfolio, because if a tech basically tanks completely, then you're going to lose a lot of money. Now, the only issue I have with this one is basically the free cash flow. They really need to grow that, because if you think about it, 128 billion market cap, and it's a basically huge company, is only got less than $1 billion of free cash flow, which is not great. But when it comes to Sharia compliance side of things, like I've always said to you guys, no affiliation, but I use Zoya. And as you can see, these are the standards that they use. Every single one of these companies ticks the box when it comes to Sharia compliant. So yeah, you can pause the video and have a look at that Sharia compliance side of things. But that's the 5 companies I wanted to share with you guys. I hope you're enjoying this content. If you are, please don't forget to join us at Patreon account. It makes a huge difference. Like the video, subscribe to the channel, and again, inshallah, I will be doing a lot more research in the next couple of days and sharing with you guys basically what I've seen in the market, what we should be doing, what we're buying, what we're selling, and as always, I will be sharing my journey as I go along, inshallah. Have a wonderful day. Assalamu Alaikum.